Hey everyone, Steve here. The debate around Tesla is louder than ever, but today I'm cutting through the noise with a clear and perhaps contrarian verdict. At its current price, Tesla is a dangerous value trap for any serious investor, and I am firmly staying away. Let me break down exactly why I've reached this conclusion. My first critical judgment is this. Tesla's competitive moat as an auto manufacturer is being filled in at an alarming rate. Look at the data. Automotive gross margins have collapsed from their peak near 30% to around 17% today. This isn't strategic price cuts. This is a forced retreat in the face of brutal competition. BYD in China has proven it can go toe-to-toe on both volume and cost. And let's not underestimate the giants, Volkswagen, General Motors, when they fully turn their immense manufacturing and supply chain power towards EVs. Many are pinning their hopes on the affordable model as a savior. Here's my take. Even if it's a hit, it simply pulls Tesla into a more crowded, lower-margin segment of the market. The idea of selling cheaper cars to justify a premium valuation is a fundamental paradox. Now, this is when the Tesla bulls jump in and say, Steve, you're missing the point. It's not about the cars, it's about FSD. It's about AI. Fine, let's talk about FSD. My second and more crucial judgment, FSD is a trillion-dollar dream, but the premium you're paying for that dream today is unjustifiable by any rational measure. Yes, if FSD is successfully solved, Tesla transforms into a software company. But that if is one of the largest and most expensive technological gambles in the world. The path is littered with technological, regulatory, and ethical landmines. Yet Tesla's current market valuation largely prices in FSD as a probable success. My view is simple. Using your hard-earned capital today to pay the full ticket price for a dream that may not be realized for a decade or ever isn't investing. It's speculating. And true value investing is built on the principle of never overpaying for potential. Let's break this down with a simple, probability-weighted framework. Take the auto business alone. It's now a slow-growth, hyper-competitive manufacturing play. It deserves a reasonable industry multiple, let's say 15-20x earnings. Add in the energy business. It's a bright spot, but still a relatively small contributor. Finally, assign a, frankly, generous 50% probability to FSD succeeding and estimate its potential value, then cut that number in half. When you run this math, you'll find a sobering reality. Even under the most optimistic assumptions, Tesla's current market cap appears severely overvalued. The stock price is banking on multiple miracles, with zero margin of safety for things going wrong. So, here is my final call. Crystal clear. For traders, the volatility might present short-term opportunities, but that's a game I don't play. For investors, exercise extreme patience. Watch from the sidelines. Either wait for a truly game-changing, concrete breakthrough in FSD that de-risks the bet, or wait for the stock price to fall significantly further to reflect the core auto business's true worth, providing you with a much-needed margin of safety. Remember this, missing an opportunity costs you nothing, but buying an overpriced asset costs you real capital. And with Tesla, I believe the risk of loss far outweighs the potential for gain. I'm Steve, making judgments based on facts and logic. I'll see you in the next one.